The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. Kicking into Monday morning. It's a beautiful thing. Let's make it a great week out here. Right now, we get the Dow Industrials up by 22. Nasdaq's flat. S&Ps are down 2. That's after we hit 1349 last night on the futures, folks.
Big time.
Yep. Gold's down 590. We're at 1585. Bottom line, bonds rejecting lower price, up 16 ticks at 149.06. Dollar rejecting lower price, down 27 ticks at the 82.29. And they put a few bucks into Spain. And the amazing part is that when you really think about it, I mean, this is like nothing. 125 billion is like, you could sneeze at it. That's not, actually, if we look up Apple for a second and just see what the correlation is.
That's too funny.
Yeah, right?
Actually,
do you know what I mean?
Yeah,
so watch, folks. If you want to see something that's really absolutely wild. Where is my Bloomberg? Oh, there she is. Okay. So just put this up here for a second. So AAPL. So Apple has a market cap. I got AAPL. See that? You know what happened here, folks? This is pretty wild. So picture this. I'm trying to put Apple up, and it's giving me the QID. That's telling me I got to go along the QID.
Yeah, I love it.
So Apple has a market cap. Oh, my God. Look at that market cap. That's $54 billion. That's $548 billion.
Yeah.
$548 billion. $548 billion. So, yeah, they're putting all of $125 billion.
And where's it coming from?
It's coming from the
European Financial Instability Fund.
That fund, exactly.
Yeah, the fund that they're still trying to fund.
That's right.
That's what cracks me up.
The fund that they're still trying to fund. That's a fact.
You know, when I went online last night, I was trying to say, okay, so how are they doing this? I'm just kind of curious. Where's the cash coming from?
Right.
And I was first like, is it because when you took a look at the strength in the dollar, or the strength in the euro, the weakness in the dollar as the markets popped last night, I said, are we funding this? I mean, that was the only thing I could first figure out.
Interesting.
And then I started digging because I'm like, if we're not funding this, it seems to me more like the euro should get weaker and the dollar should get stronger.
No, totally.
Right? And that correlation was way off last night.
And you know what's so cool about that? That's when you know, folks. Okay, so let's picture this. Exactly what Steve's saying, he was up on it, I was looking at it, and I said, look at how crazy this is.
Exactly.
That absolutely does not make any sense whatsoever. And I'm not talking about techno, that's just a fundamental.
Exactly. It was all fundamental.
Totally.
It's like, fundamental. Nothing to do with the. I knew what the charts were doing, I was like, okay.
Right.
I just need to try to understand this,
Exactly.
And as soon as I found out, it's going to be, they're going to give the details out. Maybe like June 21st is what they're talking about.
Yeah.
And the funding's supposed to come from the European Financial Stability Fund. I was just shaking my head saying, it's just, they continue to try the same. It's like a football team that continues to lose. They're going to just keep throwing the same plays out there.
Well, and they continue.
That's like the only play in their playbook.
They continue to lie.
Yeah.
Also.
Yeah, for sure.
If you look at the history here, folks, okay? The history, flat out, is we're okay. Don't worry. Got plenty of money in our banks. Oh, oops. Oh, now we don't have any money. We're okay. Don't worry about our sovereign government. Oops. We're broke.
Yeah.
Okay. It's the same playbook. The guy from Spain was basically telling all his citizens this morning that, hey, listen, we're okay now. Don't worry about anything. Okay.
Yeah.
And it's really sad, folks, is that the governments themselves. They couldn't sell. Spain couldn't sell. They went out 3 months ago and they were trying to sell a bunch of bonds, right?
Yes, that's right.
Well, the institutions wouldn't buy them.
Yeah.
You know who they end up taking to the cleaners? Their own citizens.
Oh, okay. Yeah, right.
Took them to their own. Took them to the cleaners in a big way. Amazing. 877-927-6648. Give us a call, folks. Want to know what's going on in your world now? In the world of TFNN, folks.
We're going to have fireworks. We're going to have our own fireworks. Only these are legitimate fireworks.
We get fireworks right now, folks, and this is what it is, okay? We do these Tiger Dollar deals a couple times a year, and the way that Tiger Dollars work, okay, is that they basically you buy so many Tiger Dollars, you get a match. That match is either 20%. If you're buying 500, 25% if you're buying 800, and 30% if you're buying 1150. So if you buy 500, you get $600. Now that match, folks, and the Tiger Dollars are good for everything at TFNN, no expiration date, and they are transferable. Okay, so it's real cash. What we have here, we got really creative here, and depending on how long you've been listening, where you are out here, this is how we've worked it out. And first off, I want to thank everyone out there, all the Tigers and Tigresses. I want to thank all the folks that are growling and prowling with us.
Absolutely.
Because everyone is involved in this. And what I mean specifically, we're talking about, Steve, Larry, Basil, David, Kate Stalter, Ken Shreve. What we're doing is this.
You.
Me. What we're doing is this. It just started a minute ago. No, 12 minutes ago.
Okay, good. Okay.
10 o'clock. Okay. What it is this. If you decide you want to buy Tiger Dollars, and if you get subscriptions now, just go buy them because they're good for your subscriptions and you're saving money. What you're going to get is this. You're going to get 7 workshops that have a value of $1,000. Absolutely free. We're going to be, each one of us are doing a workshop. Those workshops are going to start the Wednesday after 4th of July.
Yes.
And they're going to go for 7 weeks. And if you can't make it live that night, they're 90 minutes. If you can't make it live that night, no problem. They're going to be on your webpage for an additional 30 days. So bottom line is that if you want to get a great education...
You're not kidding.
And let me give you an idea what a lot of us are doing, okay? So Larry Pesavento, what he's doing is trade what you see, not what you think, okay? Of course, he has that book, okay?
So he's going to be talking about garlies, butterflies, sacred geometry.
Ken Shreve is going to be talking about how you find new market leaders. Okay, so you want to understand how that goes? That's where that's going to be. I'm going to be talking about how you really set up your trading system. How you really, the thing that I find is when I talk to folks is they'll say, that there's no certainty in the marketplace. I'm going to show you how you create a trading system, how you set up your own trading system where you have certainty. Right.
So I'm going to show folks how to do that, which is totally. You got to understand that. These
dates go like this. Larry's is July 11th. Ken Shreve is July 18th. Steve's July 25th. Mine's going to be August 1st. Now, what I'm going to do is this. It's kind of interesting, too, because what happened, folks, is that, I actually did it last week because someone wanted to understand the benchmarking volume. Now, the benchmarking volume is not in the last 2 books. I had it in the first book.
Okay.
And what I'm going to do is this. I'm going to do a workshop on benchmarking volume and the tick and trend so you can understand how tops come in and bottoms come in.
Yes.
So it's going to be, it's cool because you have to put it all together,
for sure,
okay?
For sure.
That's going to be August 1st. Kate Stalter is going to be August 8th. She's going to be doing it on moving averages and how do you apply them. Basil Chapman's going to be on August 15th. That's going to be using the Chapman wave, identifying buy and sell signals. David White is going to be on the 25th, and that's going to be trading like a machine, using statistics, modeling, and math in trading.
Well, I like that, trading like a machine.
Yeah, totally.
I like that.
So if you want to take advantage of this, folks, you can come over to our website at TFNN. You can see it right on the front page. You have from now, this is going through 14 days. So you get basically 10 hours of education, absolutely free. And you get a bonus for buying it. So we appreciate you being out there growling and prowling with us, and we're going to make sure that you get a great education.
That's an incredible promotion that you put together.
Yeah,
it really is. Because not only are you getting the extra, dollar, you make 20 or 30%, just the education alone. Well, the education alone is worth
so watch what happens here.
And it's archived. All those shows are archived.
It's archived. And I want you to understand the method to the madness too. The method to the madness, of course, is that we want to continue to grow TFNN, and we appreciate it out there, and we're growing it. What we also know is this. In order to stay alive in the marketplace, you have to be educated in a big way. So it's in our best interest to make sure that everyone's educated the most that we can get it done.
Absolutely.
And, You can see how that works. But that's what true capitalism is. Isn't it cool? I mean, when you think about it, Tommy and I were thinking this, okay, so what can we put together to do both?
Yeah.
Okay?
Yes.
Drive sales.
Yes.
Drive the company.
Yes.
And expand the base What we know is this, we laugh about, Hotel California once you're in the and it's the truth. But we want to make sure that when everyone's in Hotel California, well, everyone has a nice room.
Yeah, and we want to just keep building floors.
Totally, man. Let's go to our man. Let's see.
We'll come back. Mike's not on the phone, I don't think so.
Okay. Rick from British Columbia. Hey, Rick, what's going on, brother?
Hey, you forgot me. I'm on Saturday to pay less taxes.
That's right.
Okay,
That's right. I like that, man. No doubt, man.
Hey, Texas Instruments, apparently tomorrow, mid-quarter. And I was looking on the chart, and I'm not saying it can't go lower, but it doesn't look that bad to get a bounce here is kind of what I'm saying. I put it on a weekly and a monthly, and it's not looking that bad.
Let's see. Well,
I put it on a monthly. May had, I don't know, you can see it, 15% lighter volume. I mean, this thing can bounce to 31, but by the same token, this thing can drop to the lower range there. Where would that be? 20. Yeah, just $24.50, $25 down in that range. So I mean, it's a tough call, but I guess what I'm trying to say is it has not been dropping on huge volume.
It hasn't, but now watch this. This is kind of okay. So hey, listen, we're gonna be talking about benchmark volume when I'm doing this webinar. Okay, so let's do it right here. So watch. If you look at a 6-month chart,
yes.
Right, you got a big consolidation. The lows being the 22, 23, the highs 36. Well, what I always do is say, okay, tell me first off, what happens at the highs. Well, you can see at the highs on a weekly, it came off the high with volume. 74 million shares traded, right? That was the week of March, and then it goes up and tested with 46. Well, that doesn't fly. We know that doesn't fly. Now, here's the kicker, and this is where this does get subjective, folks, okay, is that you go over, and on the week of January 20th, it's like, hey, that's not bad volume.
Right.
Okay? But what you have is this. On a real benchmark, what you're doing is just saying, okay, what are you going into? Well, we had 58 million shares. That was it going to $34. Well, guess what? It's going to 74. That doesn't fly. And that's where you always want to use those percentages, okay? So where would the next spot be? Well, the next spot will be, okay, we came down hard the week of the 5th at $26, and we did 89 million. Then we did 109 million the week of August 12th. So what you have here, folks, if you're driving in a car, you have highs.
Right.
That at 36, the volume came off. We have lows that you still have volume at. Now, the last part of it, well, what ended up happening? On the week of April 20th, you had volume again. Last week, you had a lower low at volume. That's telling me, Rick, that wants to go bang right into those 24 lows, man.
Yeah, no, I don't doubt that. All right.
Cooking brother.
Guys.
Steve Rhodes, Tom O'Brien, all you tigers and tigresses, you stay right there, folks. We're coming right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Dow Industrials right now are down 8. Nasdaq's off 7. S&Ps are off $5. If we go over to Europe and we take a look at Europe, what you have with Europe right now is that France is up 0.3%. You get the DAX up 0.8. Spain is up 0.5%, and Spain, folks, by the way, was up 5%. 5. It was up 5. You talk about selling it off here. Watch this. This is pretty incredible. Spain, when we take a look at it, you had the high out here today of 69.40.
That's pretty good.
And now you're at 64.86.
Yeah.
Is that intense or what, man?
That's big.
And what we're talking, folks, is that, I mean, this is not even a dead cat. I mean, it's like just insane, meaning that we're at 80. This has come down from 8,900 to bottom hit a low of 59.
Yeah.
And this is going to go lower, you know. So today, big day with Apple.
Yeah. What do they
take a bite out of that baby?
No, they're going to be showing what, the new iPhone?
They're going to be
talking
showing
about some software.
I believe they're going to be showing quite a bit, because if you go, let's go to the Apple Store right now, because I believe if you go to the Apple Store right now, what they've done is, let's see, Google, they hit there. Let me get to that Apple Store, because I believe what's going on is that they got it shut down right now. Apple.com. They're getting ready for the big sale. They're getting ready for the announcement, I think. Revolutionary new iPad.
I don't know if that's... New or old?
Is that the... Oh, okay, hold on. No, I got to go to the store, though. I got to go to the store. There it is.
Oh, how about that?
Okay, so watch this. Yeah. So watch this, folks. I just brought up the store. It says, we'll be back. We're busy updating the Apple Store for you, and we'll be back soon. Yeah, I know. Exactly. So... Yeah, think about it. So that's going to be a big review. I mean, they already have it. Tim Cook is going to be talking at 1 o'clock Eastern Time, 10 o'clock Pacific Time.
Okay.
So, Apple was up real nice this morning. It was up at 88. I mean, the key on Apple, I would love to see this thing get into 610, and I'd sell the heck out of it. So, and okay, the market's already weak. All that would have to happen is Apple falls apart and it's all over.
Yeah.
It's all over. It's all over but the crying, folks.
Hey, so, going into my last segment.
Yes.
We had Mike from Clearwater.
Okay.
Who was calling in. He wanted to take a look at BAC. How about we pop BAC up on your screen? But the thing is, I didn't get to him to know whether he was long or short or looking for a short-term trade there. But let's just go ahead and cover it.
So... BAC, it's not a bad-looking chart, really. I mean, you have some volume up at $10. You have a break of last Tuesday with volume. Now, this is where you want to absolutely keep your head wrapped around. That's a 6-month daily. So you go 6-month daily.
Yes.
Then what we want to do is that we want to go to a 2-year weekly, okay? And we want to see what is the difference, okay? And line this baby up. So when we get into that aspect, right off the bat, what's happening is this. It's like, okay, you had the first acceleration up, which was decent.
Yeah, it was. Yeah. When you take a look at it on the weekly charts, the March 23rd high, not bad.
No, huge, actually. 2.1 billion shares was coming into 1.3. Okay? Now watch what happens, though. This is where it gets really dicey. Now turn around and put it into a 5-year to find out what it's going into. And then it's like, oh, baby. What you're doing, folks, is this. Is that the $8 to $55 level, has, oh, my God, it's 11 billion shares, and we just did 6.8. So it's like, okay, you're not done yet.
Yeah.
You're building a base, and it's a good base. So in that aspect, every time it gets down to $6 or $5, you probably want to buy it.
Yeah. Yes.
I mean, that's how it's kind of... See, because this is where, which is really cool, is that the high volume at the lows save it from going lower.
That's right.
Because it takes so much energy to get through that area. So, it's not over yet. That's the bottom line, Not over yet. Let's take a look at some of the high volume stocks we get out here, because it was not high volume right now, but we have Citigroup down $2. You get 2 cents. Sorry about that, folks. $2. You get Microsoft down 26, Apple's up 5, Green Mountain, that's getting smoked again. That's down $1.86. Let's go take a look at Green Mountain. You talk about going from heaven to hell.
Oh, my goodness.
Holy cow. Oh, look at this. It's breaking down again. Totally breaking down again. So Green Mountain went from 69 down to 21, and now it wants to do another ABC down.
Wow, that's done. Yeah.
877-927-6648. Don't forget, folks, come over to our website at TFNN. We have the Tiger Dollar promotion going on right now. And bottom line, you buy Tiger Dollars the next 2 weeks, you get 10 hours of education absolutely free. Over $1,000 for free. We're going to be right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. We have Walmart is down 14 cents. You got Intel off 14. Amazon's down $1.52. You get Big Mac flat. Caterpillar's off 83. Coca-Cola is up 12.
And interesting, just taking a look, and you got so ExxonMobil and Chevron.
Yes,
and we know that XLE has been a weak sector,
right? But
you get those two are the leaders.
Yes,
penny-wise,
right?
Inside the Dow right. They got Chevron's up 41 cents and Exxon's up 42 cents.
Yeah,
I just thought I'd point that out. I didn't take a look at the energy sector yet, or whatever.
Well, and I believe what Steve's talking about, folks. The Dow can't handle it.
Yeah,
the Dow right now. So picture this. So here, let's do the setup.
Number 6 waiting, and I think Chevron's number 3.
Right. So you get the setup would be the Dow hit 12,650 today. We're at 12,545. You're taking a swing point out from the 29th. Okay. So what you do is this: you just go back to the 29th. And say, talk to me. So the 29th, we had volume of 714 million. Now, this is really cool. So check this out, folks. Now, so the swing point had 714 million. Yes. We know that's very light volume.
Yes,
okay?
yes.
So picture this, folks. If, in fact, you close under that swing point and you have less than 714 million, right?
Yeah.
Sell away, baby.
Yeah.
Get those shots on so quick I can't see straight. And the reason is that you got a failure on price and volume.
Yes.
But what's really cool here is that 714 is so light it's unbelievable.
That's right.
Right. So when it's a lighter light on something that's very hard to do, it's even more dramatic. And the day I'm talking about is 529 at 12,611. That's the number. Let's go to Mark in Boston. Hey, Mark. Well, no, Mark in Concord.
Yep.
What's happening,
guys,
man?
Not much, guys. Happy Monday.
Thank you.
Yeah, Tom, a follow-up question in reference to Apple. Will Apple drive the entire market? The way I interpret what you said is yes.
No, it drives the
interpreting
NASDAQ.
You?
It drives the NASDAQ.
Okay. And
Not the entire market.
Okay. So Apple will have at least a partial say in what happens for the rest of today.
Yes.
Okay.
Up until... I will absolutely have a huge say, I'd say, to about 1:15 Eastern Time, 2 o'clock. Yeah, even 1:15. I mean, I'd love to see it pop up. If it popped up to the 6:10 and they didn't come out with a way that you can just get into heaven by buying an Apple product, man, I'll sell it.
Well, I do not own it.
Well, they have that app is out there.
I don't have anything to do with Apple except the ones I eat.
Well, listen, Apple's a great company. I'm not. They're the ultimate in what's happening, but it's a little like when the market wants to go south like this. Okay, when Apple itself, where I'm benchmarking this, folks. See, Apple came off the high with 37 million shares. Well, it's been going up with 14, 13, it'll be 12 or something today. That's just that's a technical call on that basis. The fundamental call, my deal would be that there's so many people that already have Apple products that they're going to continue to do great, but a natural retracement because the market's going to retrace will bring Apple back.
Well, Tom, is this the beginning of the big so-called correction to 825, or is that not yet? Do we have some more to go on the upside, in your opinion?
No, we don't have more to go. No.
No. So basically, the market's toast, as you would say.
Well, toast is relevant. I mean, the market has already gone down 144 S&P points. To some people, that's a lot. To some other people, that's nothing.
Okay.
And when it goes down, to 1,000, that'll be like, okay, some people think that a lot, other people don't. It all depends on where you're positioned, man.
All right, so a lot depends on what happens during the rest of today and how we close.
No. We're going down. What is the question? Just what is the question?
No. Well, no.
No, don't give me no. I want to know what the question is.
Should all of us be getting ready to go short, or is there more on the upside?
No. Get the shots on.
Get the shorts on. That's it. Okay.
Cool.
Thanks, guys. Take care.
Have a great one, man. Have a safe one. Hey,
baby.
You got it. Folks, I'll tell you something. The easiest thing in life, okay, is to get rid of the gray in your life. Okay, and that to me, that question was just gray, and it's much easier understanding what is the question. Okay, I could be right or wrong, but the bottom line is that I want to always understand what the question is, and I want to when I'm asking someone something, I want to understand. We've all got answers that we don't want.
Oh, absolutely.
But then that's all right.
For sure.
It's 10 times better than not knowing. Not knowing, folks, is the thing that... let's talk about this for a second, because you've had a lot of businesses.
Absolutely.
I've had a lot of businesses.
Yes.
Let me tell you something, folks. If you get a business out there, or anything, or you have a problem, okay, what you absolutely want to do is face it, because it is so much easier. Isn't it crazy that you can think that this problem is going to be huge, and then when you face it, it's so much smaller than you think.
Well, and all people really need to do, when sometimes we play a commercial where I talk about fear, the acronym false evidence,
right,
and real. And what most people can do is go back to the time in their life when they had the most fear.
Right.
They can also find out that the reality is it typically didn't unfold to that deepest fear.
For sure.
That they thought. And each of us have been there. That's
my God.
And each of us have, actually the more businesses that you've owned.
Right.
The more that you approach that fear from time to time.
I remember waking up in the morning sometimes saying, oh man, how am I going to do this? I'm going to do this and this. And then
absolutely.
All of a sudden, what ends up happening, folks, is that, whether you're starting this at 20 or 30, once you get on the road and you say, okay, man, that's it, I'm just going to look at it, and you look at it and then you realize that it's not that bad. It's like, oh my God.
That's right.
And then if you do come into a huge deal,
yes,
well, what ends up happening, then you'll get that much more focus. You absolutely will, because then at least you know what the ramifications are, and you say, okay, this is what I got to do. This is how I can go forward.
And then, so if you take that, what I was just talking about, the fear piece of it, then how you really have to apply that to yourself, folks, is you have to realize that you are harder on yourself than others are.
Totally.
And so it's so important, as Tom is saying, you have to see it really the way it is, not worse than it is, not better than it is, just really the way that it is. And so when it's you analyzing your own problem, you have to realize you're going to be harder on yourself than others are. So you got to back things off a couple of notches.
Right.
Because it's not as bad as you. That doesn't mean you're not going to deal with some bad stuff.
No.
I mean, that's okay. Now but it's a matter of, what was kind of cool was we had an ex-paramedic had called. It was the last caller during the first hour that I was doing. And I wasn't really paying attention to our clock, so I thought I still had one more segment to go.
Right.
But he was just simply talking about how, and he's now moved on.
Okay.
But he saw a lot of nasty stuff.
Oh, sure.
And it actually bothers him now more than it did back then.
Right.
Which you can kind of understand. But
yes.
But the whole idea is, and it's just so important just to not be a prisoner of your past. Just stay focused on the present.
Right.
If you can stay present, that's what I know. There's one of those cards that you pull out all the time.
No, it's a big deal.
And when you do that, and you just stay in the moment, it is so much better, anyways.
Oh my God!
It's so much better for all the people that you happen to be with at that moment.
That's right.
Because if there's nothing worse than being with somebody you're talking to,
and
right?
And
they're not even hearing you.
That's right. And folks, when you trade in the markets, let me tell you something. If you're there right then and there, whole different ball game.
Yeah.
Whole different ball game, because you'll get in positions, you'll get out of positions, and that's where the whole deal comes in. That you throw the fear out the window, and you'll throw the fear out the window only if you have the right money management. That is the essence of it all. Because then you're not going over your head. You're not going to blow your brains out. You know what I mean?
Yeah, and like you say, there's always another trade.
Oh, big time.
There's always another trade.
When you talk about trades, there's so many trades. It's sick. Let's go over and take a look at that famous Facebook deal.
Oh,
Facebook can't get out of its way. Now, the numbers come out in Facebook today. Year over year, they're up only 5%.
Okay.
Year over year.
That would be 5% of what?
Traffic.
Subscribers or
traffic on their web. Yeah. Okay. Now, that totally makes sense because they're already at 900 million. They have 71%. 71% of the people that are on the internet in the United States are on Facebook.
Yeah.
So how much more can you go?
Yeah.
But what their problem is that they sold Facebook as a growth company.
Right.
So it's like, okay, he sold us a growth. Where are you going to grow? Well, they still haven't got the 4 or 5 year olds yet. They'll get those.
Hey, that other company out there did the same thing. They sold at their high. So it was wasn't Facebook. It was one before that ended up taking everybody to the cleaners. Not everybody. Whoever, I can't remember who bought it. Oh, what was it? MySpace. MySpace, right?
Yeah.
They took,
totally.
I don't recall who they took to the cleaners, but
it's wild. There's no doubt that something else can come along that's easier.
Yeah. That's the whole.
That's technology to the ultimate.
Absolutely.
877-927-6648. Let's go look at that gold market. So gold, this has been consolidating, no doubt. Now, today, folks, is a big problem. And this is why. When we went up last week, okay, beautiful day, on June 1st, no doubt. Huge volume, had nice characteristics to at least get you up until the 1674 level, okay? Well, what ends up happening? You get to a higher high, you give it up, meaning only 185,000.
Yes.
Now, the correlation is that you come off that again with volume.
Right.
But that's still lighter volume than you're going up on, so it's like, okay, well, we'll see where it wants to shake. Now, watch this. This is where the whole deal comes. So we came down last Thursday from 1630 to 1579 with 225,000 contracts. Well, here it is here. You try to get into that level today, and it can't handle it. You only got 72, so we'll probably do about 100. That's problematic because that's saying that, okay, we are going to go after the 1545.
1535 again.
Yeah.
That's what I put in my newsletter this morning. So it's going back to 15. Going to test 1535.
I must have been reading your mind.
You were. Well,
I like that.
Just kind of like, okay, well, look, here's the setup. It's going to go back and test that.
And now, here, watch what the problem is, folks. The problem on a short-term basis is that it's probably been building cause since May 8th to go lower.
That's right.
But the bigger problem is that it might have been building cause all the way back from December to go lower. And if that's the case, folks...
That's a lot, yeah.
Oh, listen, watch this.
So I see where you're going.
Oh, yeah.
Sure.
If you bring this up, this is, you bisect and dissect these babies. You bring this up, and we put this on a weekly. And what you're going to see here is that number one couldn't make it by the supply line. Look at this. This is intense, folks. Because it couldn't make it by the supply line. It's like, oh, man, have you been building cars since last year to go the next leg down?
Yeah. Well, that's what that weekly chart says. That's what the weekly chart says. My weekly chart, where I was just simply showing the trend line and busting that trend line, was saying, okay, it's over for the time being. Not that it's over, just that you're going to get now a more of a pullback. I mean, there's nothing wrong with gold at $1,150 an ounce. There's nothing wrong with it.
No, there isn't. This trend line
it's still not even broken.
It's
not even broken.
That's intense.
Stage. Yeah.
If you want to see, folks, okay, the way the channel is set up, and that's from 2007, I believe,
that's
right?
2008. 2008, yeah. 2008.
That channel is pretty intense, man.
Yeah.
And
it's been great to be able to trade off of it. Yeah. But it all correlates back to, the dollar.
Yes.
The strength of the dollar, the weakness in the the other currencies.
Well, just think. Listen, that Greece doesn't have any money. I know Spain doesn't have any money. Portugal doesn't have any money. Ireland's paying their money back. The real question is going to be, can they get anything going? Well, they're not going to get anything going until they market to the market. Like, they're still in Spain, they're not marketing the real estate on the books to the market.
Yeah.
And that's going to be a 50, 60, 70% hit.
Yeah.
I mean,
I don't know the answers, and I don't know whether you do or not. But when they came up with the U.S. dollar index, they put the basket of currencies in there, and the euro at 50 some odd percent. Do you know how they decided on the weighting?
Yes. This is how it goes. The dollar index, folks, is predicated on the amount of trade that we do with those countries.
Okay.
So what ends up happening is that we do more trade with the euro.
Yes.
So that's why it's that.
Okay.
And it's broken down exactly like that.
Okay.
Meaning,
but they never. But it was set that way when they created the U.S. dollar index back in '85 or something like that.
Yeah, I don't even think it's that old.
No. They don't change it.
No, I think they do.
Okay.
And that's what we'll have to find that out. But I think they do.
Because I was figuring the way to get rid of the correlation between the dollar index is they just need to change the weighting structure.
Yeah, that's right. No, that's right.
Anyways, it was a strange thought.
Okay, I'm going to find that out. We're going to find that out as to, do they change those correlations with the trade weighting balance? It's trade weighting balance. That's how I know. That's how they started it. Doesn't mean they still do.
Yeah.
In fact, you know what they just did? You talk about a trip on the XLF.
Yeah.
They just changed the whole weighting in that.
Oh, did they really?
Oh, man, did they change the weighting?
Okay.
They turned around. They put.
That's really important.
They put Berkshire Hathaway #2.
Oh, did they really?
They took out. Oh man! Wait, as soon as we come back from break, I'll let you know this, and you are just not going to believe it, folks. They.
And what that sets up, folks, is also it becomes more difficult now to use the XLF because of the weighting structure. Going back and taking a look at the historical.
Yeah, no, that'd be right. That'd be right. Yeah, absolutely. Steve Rhodes, Tom O'Brien, appreciate you growling and prowling out here with us. Folks, don't forget, we just started that Tiger Dollar promotion out here today. You want to get bonus dollars that are good on all subscriptions. Get out and check it out, and you get 10 hours of education absolutely free. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Now, listen to this, folks. Okay, this is about as wild as it gets. So the XLF, for all you folks that trade the XLF out there, I just want to give you an idea of the changes and how dramatic they actually are. So Berkshire Hathaway came from not being in the XLF to 8.4% of it. Now, as Steve and I were just going through these, though, this is what's really wild. It's almost turned into a REIT index. You get Simon Properties is 2.71%. You got, we start going back down here. What do you see?
They got that American Tower REIT.
American
13,
Tower.
Number 13.
Yeah. Public Storage.
Yeah.
Prologix. I mean, this, Plum Creek Timber.
Boston Properties. We're not a realty trust.
Exactly.
Yeah.
Weyerhaeuser. Look at Lumber Company. A lumber company is 0.6% in it. A lumber company.
Kimco Realty.
So if you think they grabbed every, and you see, now watch the method to the madness, folks. This is how this goes. I talked about these Ibbotson charts before. They always want to make like things are going up.
Yes, that's right. Yeah, I heard you talking about that. I think on Friday.
That's how
that's right.
Okay. So what they do is that they'll remove certain ones.
That's right.
Okay, that are in, and they want to put other ones. I know it's sick. Absolutely sick.
That's
okay.
Right. That's right.
So if we go look at the REITs folks have been the most powerful out there. Okay. Bottom line, acceleration up. So it's like SPG. Hey, we like this stock. We're going to put this stock in here. Why wouldn't you put the stock in here? The SPG, Assignment Property, folks, is trading at $150 and it went straight up from $33.
Yeah.
What they do is that they put that in there to basically put smoke and mirror over folks' places because the people won't figure it out for a while that, I'm buying the XLF, but you might as well buy a REIT.
For sure.
When in Plum Creek Timber, that was really pushing it over the top. It's like, and warehousing. Okay, so you're in the financials and you're buying a lumber company.
Yeah.
Oh, I must have missed something. One of my teachers, man. Or is that saying that lumber is worth more than dollars?
No. Look,
not my king dollar.
You do have to pay attention. That's why I do tell folks to go back to spiders. If you go to the spider funds,
yes,
you can get an update each night of what the holdings are.
Yep.
And, if you just take a look at the top 10,
no, exactly.
You're going to get at least more than or close to 50%, or sometimes more than 50% of the weighting structure.
No,
and that way you really know what it is that you're trading. And I remember, I used to trade DBA. A bunch.
Right.
And at that stage, all that it had in there were basically 4 or 5 of the commodities that were in there.
Yes.
And all of a sudden, they changed it.
Okay.
And it didn't even have those commodities. It was such a change. It was like, what? And you just simply, the problem there was it made the rest of the historical chart worthless.
Yeah, interesting. Man.
And it could no longer trade based on that.
Yeah.
So you should always be careful, folks. And the information's out there.
Yeah.
Plus just simply what you provide.
No, it's absolutely amazing too. Just thinking about this whole deal, how this works. That though, I can tell you, folks, is one of the biggest changes I've seen. Now, I don't know when that happened. I'm not sure whether it happened 2 weeks ago, 3 weeks ago. Because what happened, this is by mistake. I was just updating it, right? And I says, what is going on here?
Yes.
So it's pretty wild. So we'll see where it shakes out.
Absolutely. Okay. So what do we got going on in the markets other than they didn't buy into the party? We didn't get the invitation. That was the problem.
No invitation. Right now we're at 184 million on the NYSE, and we're at 398 in the Nasdaq. So the way we are trading right now, folks, would be saying that you would basically have the failure at the swing point, and it'll be lighter volume. And see, the S&P's a setup too, man.
Yeah.
Oh baby, it's a setup. It's a beautiful thing. Don't forget, folks, if you want to get a great deal on Tiger Dollars, we have that promotion going on right now. You get 10 hours of great education for absolutely zero. Steve Rhodes, Tom O'Brien. Have a great one. Have a safe one. Stay right there. We got our man Basil coming up next. Then Larry Pesavento, David White, and back here with me.
Take care, folks.